things, we come across so many intricacies in GST. We are still looking for an option to reverse the output tax, excess paid tax, how to reverse it in GSTR-3B. So this is a concern for most of the small and medium business people, those paid excess tax. So like these type of issues, so many n number of issues which has to be reconciled, and the differences to be reported in annual release. It's really a cumbersome process. So it's a welcoming move by Ongole branch to conduct a meet on this topic, as this is the need of the hour. I'm happy to share this. Today's speaker, Thiruvayu Kumar garu, who will share his inputs on the topic of today's session, was my batchmate in valuation course. And he was traveling all the way to Bangalore to attend this course. That shows his commitment and interest in the subjects. So I'm sure that he will share his valuable inputs and enlighten you on this subject. Wishing you all a happy learning experience and a happy Diwali. And I once again thank Ongole branch team for giving me this opportunity. Thank you.
Thank you, madam. Now I request CA B. Jagan Mohan Rao Garu, SICASA chairman and past chairman of Ongole branch, to give his vote of thanks for the inaugural session. Unmute cheskondi sir, unmute cheskondi.
Good evening, members of Ongole branch, and I thank our chief guest, today's chief guest, CA T. Channamasthan Garu, and SIRC member, and our branch ex-officio member. Similarly, I am thanking Mrs. CA Geeta, AV Treasurer. She is a guest of honor for today's program. When we called her, she has immediately accepted our invitation within with less time. She is very happy, and we are very happy to see such a nice person. And she got pins, and both are chartered accountants at a first time. That is a very enthusiastic and encourage and to the members of Ongole branch. It is a very good news, madam, for us also. We are also saying to our children's, you take, sir. Thank you very much, madam, for your wonderful speech for today's inaugural session, madam. Thank you very much, one and all.
Thank you, madam. Now we'll commence the technical session. Today's speaker, Chakka Thiruvayu Kumar Garu, is well known to our all local Ongole members. He is one of the senior chartered accountant doing practice in Ongole since 1995. See, we are calling Thiruvayu Kumar Garu as Ongole Pantulu. Last time also he took a class in GSTR-9 and 9C. After that class, all our members enriched with knowledge, and all our members could easily do the GST audits. Now I request Thiruvayu Kumar Garu to present his paper on GSTR-9 and 9C. Over to Thiruvayu Kumar Garu.
Thank you, everyone. Thank you, madam, for your kind words. Rajendra Prasad gaరి ఇంట్లో దీపావళి వచ్చినట్టుగా ఉంది ఆల్రెడీ. సో అందరికీ కూడా దీపావళి శుభాకాంక్షలు. So today's my session will be on GSTR-9 and 9C. It will be like a low profile session. So there will not be any judgments. There will not be any sections, and nothing will be there. Totally is about practical approach. So when a client comes to me, how to start my work, and how to finish it. This is the thing today I am going to share with you. So last year I have taken a seminar on GSTR-9 9C for about 6 hours, continuous seminar at Moria Hotel. So again, second time, Ongole branch has given this opportunity for me. Now I am sharing my presentation. So sometimes this will be interactive. Whenever I ask questions, please respond by unmuting yourself.
Sir, if you permit me, can I leave, sir?
Yes, sir.
Okay, madam. Okay, madam.
Okay, madam.
Thank you, sir.
Yeah.
Thank you.
Thank you, madam. See, we came to that madam is having some other assignment. Thank you once again for sparing time for our Ongole branch. Madam, we request you to kindly visit Ongole branch in your coming term, madam.
Sure, sir. With the gotti vankai kura naku istanu ante vastanu.
Sure, madam.
Okay, sir. Thank you, sir. Thank you.
Thank you, madam. Thank you. So this is the second year of audit, GST audit. So 17-18 is already completed. So you might be knowing all the basics about the GST audit and the forms. So I'm giving brief about these forms. So in my session, today's my session, I will tell about what is the objective of the GSTR-9, what is the conceptual understanding of the GSTR-9, how to get the data from the books, how to report the figures in GSTR-9 and templates. So after completion of this session, you will be able to appreciate about all these things. So briefly, this year is similar to the last year. Up to 2 crores, GSTR-9 and 9C is optional. You need not file, or also you can file. Up to 5 crores, GSTR-9 is compulsory. 9C is optional. Optional means you can file or you can avoid filing also. Above 5 crores, it is compulsory. 9C also compulsory. That means above 5 crores turnover dealers, registered persons have to compulsorily file the 9 and 9C. 2 to 5 crores dealers, 2 to 5 crores turnover dealers have to file 9 and 9C is optional. Up to 2 crores you need not file. This is about GSTR-9 and 9C. The due date is 31st December. Present due date is 31st December. I hope they will not have any further extensions. If you file it belatedly, that is there is a late fees 200 rupees per day, maximum of 0.25% turnover, and also besides late fees, they may levy penalty also. And we have to keep the books for 6 years. That means up to 31st December 2026, we have to keep 18-19 books up to 31/12/2026 as per the GST Act. If as per the Income Tax Act, if you need to keep for more years, you have to keep for more years. But as per the GST Act, this is the date up to which we have to keep the books. Now we will go straight away to Form GSTR-9. The heading of the GSTR-9 is annual return. So what is the reason behind introducing the annual return? Actually, is it a return? Actually, this is not a return. This is a statement. Actually, statement. But they are calling it as an annual return. What is the difference between a return and statement? Return in GST, it will have a impact on our input tax ledger, on our tax liability ledger. But in GSTR-9, it doesn't have any impact on our tax liability ledger or our e-credit ledger. So just like it is an intimation. So what is the necessity of introducing GSTR-9? We are filing GSTR-3B1 all the way. Every month we are filing GSTR-9, GSTR-1 and 3B and other returns. So if department wants to carry out the audit, how they will conduct the audit? Because our returns are monthly, but our accounts are closed yearly. There is no concept of 12 months return in GST. So only 3B monthly or somebody are filing quarterly. GSTR-1 is monthly. So how department will compare the figures? Not only department, anybody how they compare the figures with the books. So it will be a difficult task to do 12 assessments. If there is no annual return, department has to do 12 assessments. For 12 returns, 12 assessments in a year, it will be a cumbersome procedure. It will be a time consuming procedure and it has got a lot of defects. So government thought of, okay, what are the monthly returns will be combined, will be joined, will be made into a one return. That is called annual return. So 12 months returns will be combined into a one return that is called annual return. Then that annual return data will be compared with the annual books. So both will be on the similar footing. Books will be on annual footing and also GST return also will be annual footing. So GSTR-9 annual return is nothing but a consolidation of 12 monthly returns. Consolidation of 12 monthly returns. Is it so? Anything else there? It is more than that. It is not only consolidation of 12 monthly returns. It contains the data about amendments made in the next 6 months also. So in the GST Act, any dealer, he has the opportunity to amend the 12 monthly returns beyond the financial year also. Beyond the financial year also. Beyond the 12 monthly returns also. That means a registered person can amend his returns, his 12 monthly returns before the expiry of due date of the next September year return. That means 12 monthly returns and the amendments made in the next 6 months returns relating to 18-19. So GSTR-9 is not only a consolidation of 12 monthly returns, but it contains the amendments made for 18-19 which are reported in the next 6 months returns. The basic problem in GST is there is no revised return concept. In VAT, in AP VAT, there is a concept called revised return. In service tax, there is a concept called revised return. In income tax, there is a concept called revised return. If there is any mistake for assessment year 1920, we will make a revised return of 1920. If there is a mistake in service tax return earlier, we will file a revised service tax return for 6 months. If there is a mistake in a VAT monthly return, we will file a revised return for that month. But unfortunately, in GST, that concept is not there. We have to file amendments while filing the next monthly return. So while filing the next monthly return, we have to report that earlier we have made a mistake. Now we are rectifying. Like that, we have to file the data in the next monthly return. So there is no revised return. Data can be revised, but not by a revised return, separate revised return, but in a regular return of a next tax period. So it poses a lot of problems, and nobody knows why the revised return concept is not introduced to GST till now. So is it like that? Anything is more? It is an excellent opportunity. GSTR-9, filing GSTR-9 is an excellent opportunity. Why? Why? Because in filing monthly returns or in the next 6 months amendment returns, there might be some errors, knowingly or unknowingly, typographical errors or technical errors or unintentional errors. There might be some errors might be there in 12 monthly returns and also in the next 6 monthly returns. The time to revise those returns is already over. The time to revise those monthly returns is already over. Then how to intimate the department that there are some errors in our returns and we are going to rectify these returns and we are paying the tax after rectifying those errors. So there is no other channel, there is no other way except through GSTR-9. So GSTR-9 is not only a consolidation of 12 monthly returns. GSTR-9 is not only a consolidation of amendments made in next 6 months returns. GST is a tool for the dealer to intimate the government, to intimate the department that some errors have been entered in the monthly returns, knowingly or unknowingly, and now this is the correct data. This is the correct data, and we are paying the differential tax also. We are paying the differential taxes. What is the benefit? By paying by ourselves, it is like a self-assessment. In income tax, there is a self-assessment is there. Like that in GST also, GSTR-9 is a self-assessment. After 12 months period is over, one has to look back and what are the total entries made in the 12 monthly returns and what is the audited financial statements. One has to check both the records and is there any, if there are any mistakes that can be rectified, that can be intimated to the department in this form. So GSTR-9 is a beautiful opportunity. Even if there is no liability to file the GSTR-9, for example, up to 2 crores turnover dealer, they can check their returns after filing their income tax returns. After filing the income tax returns, they can check their books with the 12 monthly returns and they can rectify the mistakes also. So GSTR-9 is a very good opportunity and to looking back what happened in the last 12 months and to rectify those mistakes and report those mistakes to the department. If you comply voluntarily under the GST Act, you will absolve from the liability of paying penalty and interest, okay, for a dilated period. So if you pay voluntarily, there will be no penalty. So what is GSTR-9? What it contains? What type of errors we can communicate to the department means there are only 4 types of things in GSTR-9. One is about sales. Second one is the tax liability. Third one is ITC. Fourth one is interest. That means if there are any mistake in sales in the 3B returns, you can now rectify it. You can now report to the department. If there is any mistake in tax liability, error in tax liability, now you can recalculate it and intimate to the department. If there is any error in ITC, you can report in this form. If any interest is payable, you can intimate the department that, see, I have paid the taxes belatedly and now I am paying the interest. So there are 4 things that can be reported to the government in the form of GSTR-9. It is a self-assessment of sales, self-assessment of tax liability, self-assessment of ITC, and self-assessment of interest payable. So what GSTR-9 can do? It is an opportunity for you to self-assess your sales, tax liability, ITC, and interest. If you found any mistakes, you can take appropriate action. If you found any mistakes, you can take appropriate action. And also, it is an intimation to the department that you yourself have recognized the errors and intimating to the department voluntarily. So it absolves from the levying of penalty. So what GSTR cannot do, that also we have to learn. That also we have to understand. GSTR, we are not giving any invoice-wise details. Invoice-wise details will not be there. it will be consolidated details only. So if there are any mistakes in GSTR-1, we can mention the amount, correct amount only, but you cannot rectify the GSTR-1 already filed. Okay, got it? So if there are any mistakes in GSTR-1, that cannot be rectified by the filing GSTR-9. We can only intimate to the department that there are some errors in GSTR-1. Now we are paying the tax. GSTR-1 cannot be amended. Similarly, the filed 3B also cannot be amended, because as I already told, this is not a return, it is a intimation statement. It is a consolidation statement. So you cannot amend GSTR-1, you cannot amend 3B, but you can only intimate. Additionally, input tax, we have forgotten whether we can claim additional input tax now in the form of GSTR-9. No. As I already told, it is a statement, it is not a return. Whatever amount you claimed in GSTR-9, it will not affect your e-credit ledger. It will not affect your e-credit. Posting will not be done. Posting should be done only from 3B only. In credit ledger, posting will be done from 3B only. Similarly, if you want to reverse any ITC, whether can you reverse the ITC by filing GSTR-9? No, it is only intimation. You have to reverse it by DRC-03 only. So if there are any mistakes, you will intimate in the form of GSTR-9, and that for rectification, for ITC or tax liability related rectification, we will use DRC-03 for payment of the additional liability or for reversal of the ITC. So GSTR-9 cannot do some things, it will do something. So even when there are no errors, it is better to file GSTR-9. Even though if it is optional, it is better to file the GSTR-9. In case the dealer is having 2 GST registrations, 1 PAN, 2 GST registrations, then this 9 has to be filed GSTN wise, not the PAN wise. So he has to file 2 GSTR-9s and 2 GSTR-9Cs. This GSTR-9 is not to be signed by the chartered accountant. It is like ITR form. In ITR form, we don't sign. Even though we upload the form, fill the form and upload the form, we don't sign. Similarly, GSTR-9 is similar to that of an ITR, income tax return, and that data is the responsibility of the registered person, dealer. And with his OTP, with his e-verification, it will be uploaded, and the chartered accountant signature is not required. So client comes client comes and asks us to file GSTR-9, and what we have to do? The first work is to extract the data from the audited books. The first work is to extract the data from the financial statements and also from the books of accounts. After extraction, we have to fill those data in the relevant tables of the GSTR-9 and upload the GSTR-9 in the portal. Very simple. GSTR-9 is a very simple form, though it looks like a difficult task, big form. After so many complaints, government has made it simpler, more simpler than expected. Really, no one has expected that government will make that much simpler, but now government has made so much simpler, and so many tables have become optional. What are the difficult tables are there? Some difficult tables are there. All those tables have become now optional tables. So only minimum data has to be entered, as I already told, about the sales, about the tax liability. Tax liability means output tax plus RCM tax, about the tax paid, about the ITC availed, and about the interest payable. So these are the 4 things we have to look for. Whether sales are correctly reported in GST in 3B returns, in the 12 monthly 3B returns. Whether tax liability is correctly reported in 12 monthly returns. Whether ITC is correctly reported in 12 monthly returns. Whether GST interest is paid correctly or not. These are the 4 types of things we have to verify. Now, one by one we will see. What is sales? The objective here is for verification of sales is to report the correct figures in GSTR-9. To report the correct figures in GSTR-9. What is meant by correct figure? What is meant by correct figure? Correct figure means amounts shown in the financial statements. Suppose if there is a 1 crore, 10 crores turnover shown in the financial statements and only 9 crores was reported in 3B. So our task is to report the 10 crores in GSTR-9. See, our turnover is not 9 crores. After audit, it becomes 10 crores. So our turnover is 10 crores. Like that, we have to report in GSTR-9. For example, our turnover is 10 crores. But by mistake, we have declared turnover in 3B as 11 crores. By mistake, we have declared the turnover in 3B as 11 crores. Then what we have to do? We have to report 10 crores turnover. See, we have mistakenly declared the turnover as 11 crores, but our turnover is only 10 crores. That you can report in the GSTR-9. So the objective of sales verification is, after verification of the correct sales, after getting the correct sales from the books of accounts, from the financial statements, that corrected amount should be reported in the GSTR-9. If there are no differences, there are same sales are already reported in 3B, then same figure will be reported. 10 crores as per books, already reported as per 3B 10 crores, then we will also report in 10 crores. That means irrespective of what is mentioned in 3B, whether more or less or equal, we will report sales as per our books in GSTR-9. Whether we have reported less or whether we have reported more in 3B, it is immaterial. Now our task is to find out the correct sales from the books of accounts and report it in GSTR-9. That's all. So what is the sales as per the financial statements? Is it a difficult task? Is it an easy task? Can anybody, by seeing just financial statements, tell what is the turnover of this dealer? What is the turnover of this registered person? Can anybody tell? Yes, anyone can tell easily. What is the turnover of this dealer? Yes, 10 crores. It will be there as like sales in the P&L account credit side. We will find sales. And that will be reported in GSTR-9. What is the difficulty here? It is a 1-minute job. Take the audited P&L account, check the whether what is the sale amount in P&L account, and report it in GSTR-9. It is not at all difficult, but not same in all cases. It is not same in all cases. In some cases, it becomes very difficult to extract the sales as per the GST Act from the financial statements. In one case, within 1 minute, we can find out what is the sales as per the GST Act, as per the financial statements reported, and that can be reported immediately in the 3B. Within 1 minute, we can finish our job. But in some cases, it becomes very difficult. What is the turnover? What is the sales? What is the outward supply that was reported in the financial statements? In some cases, it becomes very difficult. Now we will see example wise why it will become difficult. I have taken a small example, a simpler example rather. It is a Rama Traders, a proprietorship firm, is doing agency business of buying and selling of goods. So I have taken it simple. There is no manufacturing. It's a trading concern. They buy, is a agency business. They buy goods and they sell goods. That's how. There is no service. Now our job is to find out the exact sales as per the profit and loss statement under the provisions of GST Act. Okay. Now we will take credit side of the profit and loss account. We will examine the credit side of the profit and loss account. Now I will ask you one by one. Somebody can unmute themselves and give me the answer. Is it visible to you, or shall I increase the font? So in the left hand side of the right hand side of the profit and loss account, that means credit side, I have extracted some figures. So accountants or the dealers, they will put different names for the sales ledgers. They will not put just sales. They will put different names for the sales. For example, there may be a ledger called within state sales. Within state sales, 1,000 rupees. Whether this is a GST turnover, whether this is a GST turnover or not. That is my question. So yes, this is a GST turnover. IGST sales, that means out of state sales, whether it forms part of the GST turnover, yes. Exempted sales, whether it forms part of the GST turnover, yes. Whether it is taxable or exempted, it forms part of the GST turnover. Sales returns, minus 2 rupees. Why are given minus? So sales are in plus figure. If the sales returns are also recorded in the credit side of the P&L account, it will be displayed as minus. It will be deducted. Sales return minus 2. Whether this forms part of the GST turnover or not. This is my question. Any answer? So there is no answer. So
it has to be reduced.
So this form part of the turnover, minus 2 will reduce. Now we
have to reduce from the gross sales.
Yes, sir. Now we'll go to the another line item. Credit notes received from suppliers as discount on purchases. So each accountant will record the credit notes in his own fashion. Okay, this accountant has recorded credit notes received on purchases in the credit side of the profit and loss account as income. Okay, so like credit note received for cash discount, for turnover discount, for volume discount, for special discount, like price drop, etc. With GST, 6 rupees they have received. With GST, 6 rupees they have received. Whether this is a GST turnover or not. Whether this line item will affect the GST or not. See, we have to report the correct turnover in the GST return, GSTR-9. Whether in that figure, this 6 rupees will be considered or not. Whether add minus, that is immaterial now. So this 6 rupees will affect the turnover to be reported in GSTR-9 or not. So since it is a GST credit note, we have to report in the GSTR-9 as the turnover. So of course, this since, but this is income side they have given. So generally we will think that GST is also there. So we'll go and report. But it is not an income for us. It is a discount on purchases. It goes to reduce the cost of the purchases. And it is not an income for the dealer. It is not a outward sales, outward supply of the dealer. So one should not enter this amount credit notes received on purchases as the sales in the GSTR-9 returns. But why this person has recorded credit notes received as sales, as income in the credit side? So as I already told, each accountant has his own fashion in recording the credit notes. To my knowledge, as per my knowledge, it is not an income. It should not be reported in the credit side. It should be reported as a deduction from the purchases from the debit side only. It is not at all an income. It is not an outward supply for the dealer. It is not a sales for the dealer. It is not an outward supply for the dealer. So whether the credit notes received on purchases with GST or without GST, it will not form part of the GST turnover. Okay. So it is not it is no. It will not form part of the GST turnover. So next item. Without GST, financial credit note received on purchases. So anything received on purchases is does not affect our output sales. We have not issued any invoice, so we will not mention anything here. So with credit note or without credit note, if anything is received as a discount, please remember, as a discount from the purchasers, from the sellers, that means on purchases, it is not a turnover for us. It is not a turnover for the dealer. It is not sales for the dealer. So we will not report in GSTR-9. Now consider another credit note. In some cases, credit notes will be received from the supplier for another reason. That is business promotion. As a business promotion activity, to conduct some business promotion activity, some fair or some meeting, some advertisement, something else. The companies will give credit note to the dealers for the purpose of the business promotion. As a reimbursement of the expenditure, they would have incurred some expenditure on behalf of the company, and they might have received that amount as a credit note. And sometimes salesmen's salaries will be borne by the company, will be borne by the purchaser. For example, Hindustan Unilever, their salesman will be there at Ongole. That salesman will be reporting to the Hindustan Unilever, but salaries will be paid by the local dealer. Whatever salaries paid by the local dealer will be reimbursed by the company. Will be reimbursed by the company. So for that also credit note will be given. So what is the treatment of these credit notes in the GST? Whether it is a supply or these things also will go to reduce the cost of the purchase. This is my question. Whether the credit note received for reimbursement of the salesman's salaries, credit note received for reimbursement of the expenditure, credit note received for business promotion, whether this is an outward supply of the dealer or it will goes to reduce the purchases amount. In my opinion, these are the outward supplies of the dealer. It forms part of the outward turnover, and the dealer has to raise the service bill with the GST to the company. Service bill with the GST to the company. Then company will credit the amount in the dealer's ledger. That's why they issue a credit note. Since they are crediting that amount to the dealer, they issue a credit note for that also. If you raise a salary bill means outsourcing, like outsourcing. Sir, this month we have paid 50,000 rupees as salaries and 18% GST, 59,000, a bill will be raised on Hindustan Unilever. That 59,000 will be credited to the dealer account immediately by way of a credit note. So we should not misunderstand that it is a credit note like a discount credit note. This is not a discount credit note. This dealer has rendered some services on behalf of the company to the company, and that company is giving amount. So dealer issues a GST invoice, and Hindustan Unilever will credit that amount to the dealer's account by way of a credit note. So credit notes are two types. Credit notes received from the company are two types. One is for discount on purchases, and another one is credit note for rendering services to the company. In the case of discount credit notes, it will goes to reduce the cost of the purchases. It will not form part of the dealer's turnover. But in the case of credit notes received for business promotion, for reimbursement of expenditure, salesman salaries, it is a outward supply for the dealer. It forms part of the sales of the dealer. It is a sale of service. So generally, initially I told he is dealing in goods only, but now he has to issue a service invoice also to the company. Supply of service. It comes under supply of service. Whether with GST means is a taxable supply, without GST means it is not a taxable supply. So whether with GST or without GST, it forms part of the turnover of the person as per the GST Act. So now we are including this turnover in the GST returns, GSTR-9. In the sales side, in the income side, in the credit side of the profit and loss account, you will find this heading also. Freight and forwarding charges collected. Freight and forwarding charges collected. Sometimes you will also find packing charges collected. Okay, so whether it is a part of the turnover or not, it is a turnover. Maybe composite supply or a separate supply. It is a turnover. It is a supply of service and it will form part of the turnover. And this also we have to report in GSTR-9. So I used the word net. What is net? Some dealers, what they will do now, they will collect freight and forwarding charges in the invoice. Say for example, total collected 1 lakh. And they will also spend something on freight charges, really also. Say for example, 60,000 was spent on freight. So what they will do, that accountant will do credit 1 lakh and the expenditure also will be debited to that account. So net figure will be appearing in the credit side of profit and loss account. For example, 1 lakh is the collected, 60,000 is debited to that account. Net figure was showing as 40,000 in credit side of the P&L account. Then what is the turnover to be reported in GSTR-9? It is 1 lakh, not 40,000 balance figure. We have to report to 1 lakh. That means we have to drill down the ledger of the freight and forwarding charges collected. In the P&L account, there will be only 40,000 appearing. But it is not correct. Total collected is 1 lakh, outward supply is 1 lakh, and 60,000 is your expenditure. So we have to report the turnover, not the net. So if there is a net reporting in the credit side of P&L account, we have to report gross amount, we have to report gross. So as per accounting also, this type of treatment is wrong. Accounting standards, as per accounting standards also, this type of netting the both is wrong. So we have to advise the accountant next year onwards, you show the collected in the income side, you show the expenditure under the expenditure side, debit side. After gross profit, under indirect incomes head, you may be finding interest from savings bank account, 1 rupee. Interest from savings bank account, 1 rupee. Interest from bank fixed deposit, 2 rupees. Whether we have to report this in GSTR-9 as turnover or not. Yes, this is a supply of service, and we have to enter this turnover in GSTR-9. Though it is not taxable, it is a supply. Though it is not taxable, it is a supply, and we have to enter it in GSTR-9. So we are talking about sales. Outward supply. So shall we look only credit side of the profit and loss account, or shall we look debit side also? Yes, sir. There may be entries. There may be entries in the debit side also, but which affect the sales. In some cases. So what is that one? Discount given to customers on sales. Discount given to customer on sales. You will find in many profit and loss account statements, discount on sales will be recorded as an expenditure side item. Actually, it is not an expenditure. It will goes to reduce sale value. So some accountants, they will enter this amount as the expenditure side. So whether we have to reduce this amount from the sales or not, we have to reduce this amount from the sales, because with GST also credit the customer. Price discount is given, volume discount is given, cash discount is given, and credit note is issued to the customer with GST. So it goes to reduce the outward supplies of the dealer. So sometimes we will find entries affecting the sales in debit side also. Okay. Discount received from suppliers. So as I already told, the discount means generally it is not a GST affecting item. So it is a discount on purchases. So it will goes to reduce the cost of the purchases, and it's not a outward supply. If other than discount credit note is received, as I already told, for promotion, for some expenditure, for salaries and some other thing, then it will be an outward supply. If it is a discount on purchases, it is not an outward supply. So whether it is reported on credit side, whether it is reported on debit side, discount on purchases will not form part of the GST turnover. So discount given to customers with GST, yes. Without GST, yes. So we have checked the profit and loss account. We have just checked the profit and loss. From where we can find other supplies of the dealer, other sales, other income of the dealer. This is a proprietorship firm, and all the incomes may not be routed through the profit and loss account. Some incomes might be routed through the capital account, which are shown in the computation memo only. Those incomes are not routed through the profit and loss account. Then how to find those incomes? So we have to check the capital account, or we have to check the memo, income tax computation statement. From there also we have to check. Sir, is a business, so only sales reported in profit and loss account only should be shown in GSTR-9? No. It is a proprietorship firm. It is a proprietorship firm. Whether it is a income is received in a capacity of in the name of the proprietorship firm or in his individual name, both have to be reported in GSTR-9. So, for example, if you verify the memo, you may find that he is receiving rent, which was shown income from house property. Say, for example, 5 lakhs. That is also form parts of the turnover. Whether it is exempted or taxable, it's another issue. If rent is received and is not routed through the profit and loss account, then also it is a supply. Then also it is a supply. Even though it is in his individual name, it is a supply. Capital gains from sale of shares. Okay, so shares are completely outside the purview of the GST. So we need not report the sale value shown under the capital gains. Interest from money lending, which is he is declaring that interest from money lending not in the profit and loss account, but he is declaring it in other sources head. Even if it is declared under other sources head, it is a supply. It is a supply, outward supply, and we have to declare it is in GSTR-9. Commission received from LIC. Yes, it is an outward supply. Vacant site lease received, disclosed and other sources. Yes, it is an outward supply. So all the incomes received by him should be, whether it is routed through profit and loss account, whether it is routed through capital account, whether it is routed through other sources head directly, all those things we have to declare in GSTR-9 for our outward supply. So in the income tax return, how these things are declared? This will be another question. So whether discount received from on purchases is reporting as income, or is showing net off and showing net purchases in the ITR form, it's a different matter. So why I am telling here is that tomorrow income tax department and GST department both have memorandum of understanding and both are exchanging the information with each other. So in one ITR form, the turnover is 11 crores. In ITR form, turnover is 11 crores. In GSTR, turnover is 10 crores. Because 1 crore is a discount received on purchases, but by mistake, that was shown as income in the profit and loss account. And same carried to the ITR form also, as shown as other income in ITR form. Sales 10 crores. Other income. What is other income? Discount received on purchases 1 crore. Total credit side of the profit and loss account as per the ITR form is 11 crores. But in GSTR-9 or GSTR-3B, you have declared only 10 crores. So please explain what is 1 crore and pay tax. That may be the notice that person might be receiving in future. So while reporting ITR also, care should be taken. Only outward supplies only to be reported. So this is the template we have to prepare for ourselves. Tax rate by sales to be prepared. So first column is the tax rate percentage. Second column is the taxable amount. Third column is the IGST. Fourth column is CGST. Fifth column is SGST. Sixth column is cess. If you are having cess, I have omitted cess. Sixth column is total tax. If you are having, you can add cess also here. So it's just a simple table we have to prepare. As I already told, in some cases, it will be a very easy task. Within 5 or 10 minutes, we can prepare this table. But in big firms, it will be Hercules tax. It may take 2 days, 3 days, 4 days to find out this thing. So what is the exempted sales? 0% exempted sales. What is the 5% sales? What is the 12%? What is the 18, 28, and all types of sales we have to record here, and we have to arrive the not only taxable amount, we have to arrive the what is the tax liability on those sales. What is the tax? This is a simple template that we have to prepare. This will show exact figures as per the books. As per the books, what is your turnover? What is the tax liability on that turnover? Whether it is IGST, CGST, SGST, we have to record that turnover and that tax in this table. Debit notes, credit notes, discount on sales and sales returns are to be adjusted against the respective tax slab and then calculate net tax payable. There may be credit notes received, there may be purchase returns, sales returns, all those things can be net off against the applicable tax rate, and the net of the taxable amount we can show here. For example, sales are 1 crore, sales return as 10 lakhs for 5% sales. You can show here as 90 lakhs is the taxable amount. So, what are the common errors? What are the common errors? So, how to check the correct figures from the books? Is it so easy? Means no, it is not so easy. Even though books are audited, under the Income Tax Act, but these figures may be wrongly recorded in books of accounts. So the auditor who audits the books of accounts under the Income Tax Act, he will look from that angle only. He will not look from the GST angle. So report is also given under the Income Tax Act, not from the GST angle. So now there may be errors which are unnoticed during the 44AB audit that we may be finding now. One example I am giving. See, output tax is not at all recorded in tax invoice. So the parties using Tally software. In Tally software, taxable sales was entered as 1 lakh rupees. Before that line item, he has to enter CGST 9%, SGST 9%, total 18,000 GST, 1 lakh taxable amount, 18,000, total 1 lakh 18,000. But by mistake, that accountant has forgotten to enter the CGST amount, SGST amount, or for that matter, IGST amount. So though it is taxable supply, in the invoice, it was shown only as 1 lakh sales. There is no CGST, there is no IGST, there is no SGST. Total invoice value is also 1 lakh. Say for example, this is a cash sale. This is a cash sale. So the buyer also unnoticed it. There will be no buyer, small buyers will be there. They are unnoticed. This mistake may not be found out by the income tax auditor. Okay. May or may not. So at the time of GST audit, at the time of preparing this table, that mistake will be come out, will be known that time only. Right? The total sales is 1 crore. 1 crore, 5% sales. 1 crore means output tax liability should be 5 lakhs. But it is showing only 4 lakhs 90,000. It is a sales of 5%. Total sales is 1 crore as per the profit and loss account. However, in the ITC, in the tax payable ledger, output tax, the tax was showing as 4 lakh 90,000 only. So here, if you reverse calculate the tax rate, then you will find out total sales is 1 crore, tax payable should be 5 lakhs, but in the books of accounts, it was recorded as 4 lakh 90,000 only. Then you have to drill down to each invoice where the mistake was there. You have to go to each invoice and you have to find out why it is showing as 4 lakh 90,000 instead of 5 lakhs. Second type of errors. In one tax invoice, tax amount is wrongly entered as 100 instead of 1,000 rupees. So in this invoice, he has rightly mentioned the taxable amount, but while entering the tax amount, percentage is also has entered correctly, but while entering the tax amount, 10 was extra entered, or 10 was less entered. This type of mistakes also will be known when we prepare this table, and we prepare this table. Another type of errors. This might be unnoticed during the income tax audit. This might be unnoticed during the income tax audit. Third one. In one invoice, IGST mentioned instead of CGST as GST. By mistake, he has entered it as an IGST and it gone to IGST. Tax rate was correctly mentioned, but actually it is CGST as GST, intrastate sales. So wrongly mentioned. So this is also a mistake. Tax rate wrongly applied. Say for example, a person is dealing with 5% and 12% or 18% and 28%. While raising the invoice by mistake, by oversight, he might have applied 28% tax rate for a 18% tax rate item or 18% tax rate for 28% rate of item. Credit notes for sales returns is given without GST. So when there are sales returns from the customers, he has issued the credit note. Total amount was credited to the party account, but bifurcation of GST was not given. Say for example, 1 lakh goods were returned. 1 lakh goods of 18% tax were returned. So total amount of credit note to be issued to the customer is 1,18,000. Total amount of 1,18,000 is given to the customer, but the breakup is not entered in the credit note. Total amount was given as 1,18,000, single line item. Bifurcation was not there. So what are these mistakes? How to rectify this? We have to one by one. We have to check and we have to report the correct figure. But keep in mind, if you collect the excess tax, you cannot rectify it. So Act what says that if you collect excess tax, you have to refund that excess tax to the dealer or remit to the government. You cannot keep it yourself. So if there is any excess charge was noticed, you have to either refund to the dealer, to the customer, or pay to the government. But your dealer cannot keep that extra tax collected from the customer. So after all these things, this table should be finalized. What is the taxable amount? Rate of tax wise. What is the IGST, CGST, SGST, and control check also you should make. So one aspect is over. Now we are entering to second aspect, tax liability. What is the objective of tax liability here? Here also our objective is to report the correct tax liability in GSTR-9. Whatever reported in 3B, please ignore. Now you report the correct tax liability in GSTR-9. Already we have calculated tax liability here in this table itself. While collecting the sales data, we have collected the tax also. So it is there in the tax table. So tax liability means not only on forward charge, not only on outward supply, it includes reverse charge also. That is the difference between output tax and tax liability. Okay, there is a slight difference. Tax liability includes tax payable on outward supplies and tax payable on inward supplies, RCM, reverse charge mechanism. So under this heading tax liability, we have to calculate tax on forward charge, tax on reverse charge. Already forward charge we have already calculated. So now our job is to calculate tax on reverse charge. So it is a big task for the auditor to find out the reverse charge transactions from the books of accounts of the client. Okay, so whatever he gives, we have to accept. Otherwise, we can check the ledgers of the in the trial balance or in the profit and loss account. If there are any items which attracts the reverse charge, we can check those items. So in reverse charge also, we have to prepare tax rate wise. There may be 18% items for reverse charge. There may be 12% items for reverse charge. There may be 5% items for reverse charge. We have to calculate tax rate wise reverse charge. Now we are ready for the calculation of the total tax liability. As I already told, total tax liability equal to tax on outward supply, tax on inward supply, forward charge plus reverse charge. So total tax liability. We are coming to total tax liability. So finally, we have to prepare this table 3. Type of supply, outward supply. What is the taxable amount? IGST, SGST, CGST. Inward supply means reverse charge, taxable amount, IGST, CGST, SGST total, and total tax liability and total tax liability. So what is the total tax payable by the dealer for the whole year? We will get it here. Okay, this is the thing we have to find out. Okay, boss, we have done so many business, credit notes, debit notes, everything is there, reverse charge is there, forward charge is there, 5% tax is there, 12%, anything, whatever may be. Totally, what is your liability? What is your liability? Tax liability, you have to find out here. Just like similar like income tax, there may be 5 heads of incomes are there. What finally what we will do? What is the liability of tax liability of that assessee? We will find out. Similarly, what is the tax liability, GST tax liability of that dealer? We have to find out. After finding out this tax liability, what we have to do? We have to check how much was paid by him. Okay, boss, the total liability is 1 crore rupees. We have arrived this. After so many calculations, additions, deductions, deletions, exclusions, we have finally concluded that your tax liability is 1 crore, comprising of IGST, CGST, SGST, cess. Your liability is 1 crore. Okay, now how much you have paid? How much you have paid? You have paid 1 crore. Very good. Good customer. No issues. Tax liability is 1 crore. Tax paid is also 1 crore. No issues. If tax paid is less than 1 crore or more than 1 crore, then issues comes to us. Okay. So we have to calculate the tax paid. Where it is available? Where can we get the tax paid amount? We can get the tax paid amount in 3B returns. In which month 3B return? 12 months 3B returns. In 12 months 3B returns, every month we are declaring how much tax was paid. We have to total all the 12 months 3B returns. Not only 12 months 3B returns, the dealer might have paid tax using DRC-03 also for any period. So apart from adding the 12 months tax paid, we have to add the tax paid in DRC-03 also. Is it sufficient? No. We have to add any tax paid which was declared in the next 6 months returns. As I already told, dealer can amend the supplies or amend the ITC in next 6 months returns. So if he has paid any tax of this 12 months of this financial year in the next 6 months returns, that also we have to take into consideration. So to find out the tax paid by the dealer, we have to consider all these 3 segments. 12 months 3B returns, tax paid for this 12 months using DRC-03, and tax paid in the next 3 months returns for this financial year. 18-19 financial year, tax paid for 18-19 financial year in 19-20 GST returns through 19-20 GST returns. So all put together will come out to, if it comes to 1 crore, then it's okay. If it is less than 1 crore, if it is more than 1 crore, what is our action to be taken? What is the remedy? There will be only 2 scenarios: excess paid, short paid. Third scenario is very good scenario for us. Same amount paid. 1 crore liability, 1 crore tax paid. Very happy. Other than that, 2 things might be there: excess paid, less paid. Okay. Now we will see with an example. So this is a dashboard, table 5, template 5. This is the dashboard. Outward supply 100 rupees, tax payable 18 rupees, IGST-9, CGST 4.5, SGST 4.5, total 18 rupees, inward supply 10 rupees, CGST 2.5, SGST 2.5, total tax 5. So our total tax liability under IGST 9 rupees, under CGST 7 rupees, Under SGST 7 rupees, total 23 rupees. Total 23 rupees. On our outward supplies, on our RCM supplies, total tax liability is 23 rupees. How much tax was paid? You should have ideally paid 23 rupees. That we have to check out from the, just already told, from the 3B returns. Next month, next 6 months 3B returns, DRC, we have to find out the what is the tax paid, and we have to record it here. Say for example, tax paid is only IGST 8 rupees, CGST 7.25, SGST 7.25, total tax paid is 22.5 rupees. Whereas the liability is 23, but tax paid is 22.5. Then what is the short paid? Short paid, if you see the total tax, you will get short paid amount as 0.5. But total tax we should not check. Never check the total tax amount, because there are 3 acts, 3 different taxes we have to pay to the government differently, separately, individually. So IGST wise, excess paid or short paid. CGST wise, excess paid or short paid. SGST wise, excess paid or short paid. Now we will see. IGST total tax payable is 9 rupees, tax paid 8. So short paid tax of IGST is 1 rupee. A minus B. Come to CGST, total tax liability 7 rupees, tax paid 7.25. Here it is not tax, is not short paid, it is excess paid. So I have given another row. 7 minus 7.2, that means excess paid. 0.25 is excess paid. SGST, same amounts. 0.25 is excess paid. So, though there is a 0.5 difference of tax paid in total, but we have to see each type of tax wise, each tax wise. So, each tax wise, IGST 1 rupee excess paid, CGST 0.25, sorry, IGST 1 rupee short paid, CGST 0.25 excess paid, SGST 0.25 excess paid. So what is the possible resolution? Now we have find out the difference. There is a something difference between the actual tax payable as per the books of accounts, corrected books of accounts, as per the corrected books of accounts, audited books also. As already we have discussed, there may be some errors under from the GST point of view. So corrected books of accounts as per the GST Act and the already tax paid, there is a difference. In one head we have short paid, under some heads we have excess paid. What is the resolution? Short paid tax, what we have to do? If you have paid the amount, less amount, what we have to do? Generally we have to pay the balance amount now. Balance amount now we have to pay along with the interest. Say for example, we have to find out for which month we have short paid tax. So for example, it is April 2018, then you have to pay interest from April 2018 until now, you have to pay interest on that also. What is the way to pay? We have to pay, generally we pay taxes in the form of 3B. But here we have to pay tax in form of DRC-03. The differential tax has to be paid in the form of DRC-03. When it has to be paid, my suggestion is pay before filing GSTR-9. Pay before filing GSTR-9 itself. Pay before GSTR-9. What is the advantage? Yes, sir. If you pay the taxes before filing GSTR-9, you can pay it by way of adjustment in input tax credit. By utilizing the input tax credit, you can pay the differential tax if you pay it before filing GSTR-9. If you want to pay the tax after filing GSTR-9, you have to pay by way of cash only. Even though you are having input amount, you cannot pay input, you should not pay input tax credit using input tax credit. You have to pay by way of cash only. So if any additional tax liability is there, better to pay it by way of DRC-03 before filing GSTR-9. That is for short tax.
It is very good suggestion, important one. It will help many members. So far, many of our members are an impression that whenever any tax liability arises during GSTR-9, we may think that cash ledger is mandatory. But with this suggestion, we can utilize even ITC. Thank you. You can continue, sir.
Yes. So short paid, so government asks us to pay the short paid tax. Then what about the excess paid tax? Can we get refund? Just like income tax, excess paid advance tax, excess paid self tax, can we get refund? Yes, if you pay excess tax, you can also claim it as refund in GST. Short paid tax has to be paid immediately, and excess paid tax can be claimed as a refund by filing separate refund application under the excess paid tax category. So there are so many categories are there in the refund application form. So you can claim refund under the excess paid tax category. Sir, both are governments only, whether this 1 rupee excess short paid, excess paid 50. So can I pay the net amount of 0.5? Net amount of 0.5? No, not possible. Both are separate tax. CGST Act is separate, SGST Act is separate, IGST Act is separate. So we have to pay the tax, each tax wise we have to see and pay. So is there any further thing? Yes, there are something more. We will see what is it. As I already told, if there are any differences, we have to drill down to the invoice level. What happened actually? Why there is a difference of 1 rupee? Why there is a difference of 0.25, 0.25? Okay, we have to drill down to the invoice level. Here, if you observe keenly, IGST is short paid, SGST, CGST is excess paid. What might be the reason? One reason might be IGST sale was wrongly shown as CGST, SGST in 3B returns to the extent of 0.25, 0.25. Okay, actually, it is IGST sale. In the books of accounts also, it is recorded as the IGST sale. But by mistake, while filing 3B, it was shown as CGST, SGST and tax paid 0.25, 0.25. It is a mistake. Then you will come to know it drilling down to the invoice level. Invoice level, you have to verify what is reported in GSTR-1, what is reported in 3B, and what is there in books. In invoice wise, we have to do verification. If you found this mistake, then there is an opportunity for you. There is some section 77 is there. Under section 77, both can be set off. Sir, this 0.25, 0.25 was excess paid, wrongly paid instead of SGST, instead of IGST, we have paid SGST, CGST. Please adjust yourself and I will pay net balance 0.5. No, allowed. So if there is any difference of tax, you can drill down to the invoice level. You can find out the exact reason and then you can give some better advice to the client. If it is not possible to go to the invoice level, this dealer has to pay 1 rupee as IGST and claim refund as 0.5. It is not possible to pay 0.5 net if he doesn't go to the invoice level. So now we know about the health of the accounts. Now we know about the health of the GST returns from the aspect of sales, from the aspect of tax liability, whether dealer has correctly reported in 3B or not, whether dealer has paid tax liability correctly or not. Now we know. Knowing one thing, reporting GSTR-9 is another thing. Okay, so biggest task is reporting these figures in GSTR-9 because that format is very cumbersome and it is very difficult to report the details. So many details they have asked. So after so many representations, government has simplified the GSTR-9. So many tables have become optional now. So many rows have become optional now. So in a simple steps, we can fill up this data in GSTR 9. So if your client is using GSTR tally, you can extract the data from tally. So from the sales register, you can extract. If he is using the GST futures in tally, they are giving the GSTR-9 summary data. There also you will get percentage wise directly within the press of a button. You will know what is the percentage wise tax rate wise sales, tax rate wise liability, net of credit notes, RCM, everything it is available in tally books if the client is using GST future of tally. If the client is not using the GST future or not properly using the GST future, then it will become a Hercules task for the auditor to extract the sales, to extract the output tax from the tally books, because he may enter the sales using the sales voucher, he may enter the sales using the journal voucher, he may enter the sales using the receipt voucher. There are 3 possible ways. If you enter the sales voucher using the sales voucher, it will be very easy for us to find out the total sales and output tax liability. If that accountant, if that dealer is entering the sales in F7 journal mode, in F6 receipt mode, then it will be very difficult for the auditor to extract those figures from the books of accounts. So everyone knows what are the fields. There are so many tables in GSTR-9, and what are the fields relevant for the sales and tax liability. Table 4, taxable sales. Table 5, exempted sales. Table 9, tax liability. Table 10, next 6 months returns data. Table 11, next 6 months return data. Table 14, tax paid in next 6 months. So there are 1, 2, 3, 4, 5, 6 tables have to be filled up with respect to the sales and tax liability. Table 4, table 5 are important tables. Table 4 is a supplies on which tax is payable, that is taxable supplies. Table 5, supplies on which tax is not payable, that is exempted sales. So taxable sales, exempted sales, we have to report in 2 tables. And third table is the tax liability, how much tax is payable and paid. Both are there in table 3. Table 9, that is table 9 of GSTR-9. So table 10 is regarding the, if you have declared and paid any tax in the next 6 months returns. If you have declared any tax of this financial 18-19 financial year in the next 6 monthly returns, that means April, May, June, July, August, September of 19-20 monthly returns. If you have paid anything, that has to be reported here. If you have reversed anything, that has to be reported here. So if you have, after reporting, if any tax was paid, that also to be reported in table 14. So there are 6 fields, 6 tables we have to fill up in GSTR-9. Now we'll go to the GSTR-9. So some members may be having doubts. So why Thiruvayu Kumar is not telling about GSTR-9 system drafted, GSTR-3B consolidated, GSTR-1 consolidated, whether we have to take GSTR-3B sales, whether we have to take GSTR-1 sales, whether we have to take system drafted GSTR-9. Ignore all. Ignore all. You need not look into all those things. What is there in your books? Just you enter those figures in GSTR-9. Okay. All the 3B consolidated, 1 consolidated or 9 system drafted may help you whether you have extracted the figures correctly or not from tally, from the books of accounts. If both are same, you can conclude that you have extracted correctly. If the figures are different, that means your book sales shows 9 crores, your 3B sales shows 10 crores, then you have to double check your books. For that purpose, it will be useful. Why this person has declared 10 crore sales in 3B? Why he is showing only 9 crores in the books? Whether books are wrong or 3B is wrong. For that purpose, for double check purpose, all those figures will be useful to you. 3B, as per 3B, 10 crore sales, books 11 crore sales. Why he has declared less sales in 3V? What is the reason behind it? Or our assessment is wrong? Credit notes, discount received on purchases also we have added up to sales. We have added up to outward supplies. That we have to check. For double check purpose, those figures will be useful. Otherwise, no use. So that's why I'm not stressing on GSTR-1 data, GSTR-3B data, system computed data. All those are not relevant for us. So I will take, if permission is given by the chairman, I will take 5 minutes break.
Okay, sir. గుడ్ ఈవినింగ్ మెంబర్స్. వీడియోస్ ఆన్ చేయండి, సరదా కాసేపు మాట్లాడుకుందాం, చాలా కాలం అయింది.
వీడియోలు ఆన్ చేయండి, మార్కులు చేయండి.
సార్ కొంతమంది కొత్త వచ్చినట్టుంది, వాళ్ళని ఇంట్రడ్యూస్ అయ్యండి. కిషోర్ కొత్తగా వచ్చాడు, అబ్బాయిని ఇంట్రడ్యూస్ అయ్యండి.
కిషోరా? చాలా చిన్నోళ్ళే కానీ
ఇప్పుడే వచ్చాడు సార్, అందుకని ఇంట్రడ్యూస్ చేయమంది.
అట్లాగా
రామప్రసాద్ వచ్చాడు,
రామప్రసాద్ గారు వచ్చారు.
అదో శంకర్ వచ్చాడు, చేతులు కొట్టుకుంటున్నాడు.
ముందు మీరు వీడియో ఆన్ చేయండి. సెక్రటరీ గారి మాట, ట్రెజరర్ గారి మాట, వైస్ చైర్మన్ గారి మాట ఏకపోతే అట్లా మీరు కమిటీ మెంబర్స్ వీడియో ఆన్ చేయాలి.
రంగనాయకులు ఉన్నాడు,
ఏంది
కారులో ఉన్నాడు.
ఏ ఊరు కారులో ఉన్నాడు?
స్పీకర్ వ్యూ వస్తుందా మీకు?
హారన్ కొడుతున్నాడు మనోడు, తెలియాలి.
డియర్ మెంబర్స్
స్పీకర్ వ్యూ వస్తుంది,
ప్రసాద్ గారు నేను ఒకసారి
ఇంట్రడ్యూస్ చేయండి అమ్మా ఇతన్ని.
వాయిస్ రావట్లేదు
సార్ మధు గారు, మీ వాయిస్ రావట్లేదు సార్.
జగ్మోహన్.
మధు గారు
జగన్ కందుకూరులో ఉన్నావా?
లేదు లేదు, ఎల్లా వర్షం కదా అని ఎల్లా.
మంచి పని
సార్, ఇంట్లో ఉన్నారు ఆఫీస్.
అక్కడ కూడా అదే సెటప్ పెట్టాడేమో, కందుకూరులో కూడా.
లేదు, దాని టైం పట్టింది.
మధు గారిని పరిచయం చేయండి సార్.
అదే స్పాట్ లైట్ చేశాను, మళ్ళీ పోయింది. మధు గారు
సార్ది ఆడియో రాలేదు, అందుకనే కట్ అయిపోయింది.
ఆఫ్ చేశారు, వీడియో ఆఫ్ చేసేసారు అసలు.
ఇంకెవరు ఉన్నారు ఇక్కడ? శంకర్, వంశీ ఎప్పటి నుంచి ఉన్నాడు.
39 మెంబర్స్ ఉన్నారండి.
రామప్రసాద్ చూపిండి, ఆయన చూసి చాలా కాలం అయింది.
ఇప్పుడు అడుగుతా ఉన్నాను.
రామప్రసాద్ కావాలి, రామప్రసాద్ అడిగాడు సార్. మేము చూపిస్తాం సార్.
రామప్రసాద్ చూపిండి,
చేసేస్తాం అందరికి.
మాకైతే వెనకే ప్యారడైజ్.
మేము ఏఆర్ఎస్ మెంబర్స్ సార్, ఇంకా 50,000 కట్టాం మేము అడిషనల్ గా. మేము ఏఆర్ఎస్ మెంబర్స్.
టీపీ అవర్స్ అన్నా, ఇది ఫుడ్ కన్నా.
నువ్వు ఇట్లా లిటిగేషన్ పెడితే అందరికి ఆగిపోతా.
షూరు, ఫుడ్ వరకు సెపరేట్ కలెక్ట్ చేద్దాం.
ఓకే ఓకే, ఫుడ్ ఏఆర్ఎస్ అని పెట్టండి మళ్ళీ.
గోల్డెన్ మెంబర్స్ అని చెప్పి ఇంకో స్కీమ్ తయారు చేసేసి దాంట్లోకి అప్గ్రేడ్ చేస్తాం, కడితే అప్గ్రేడ్ చేస్తాం. ఓకే, ఇంకా మీటింగ్ స్టార్ట్ చేద్దాం. తిరువై కుమార్ గారు,
కార్తీక మాసంలో ఒకటి సెమినార్ పెట్టుకుంటున్నాం.
సెమినార్ ఇంకా అయిపోలేదా?
ఇంకా చాలా ఉంది. 21 పేజీకి గానీ ఆయన 15 పేజీలు స్టార్ట్ చేద్దాం.
9C రాలా? 9C వస్తే ఇంకా
సెమినార్ అయిపోయింది, కొంతమంది వెళ్ళిపోయినట్టుంది.
35 మంది ఉన్నారు.
5 మంది ఉన్నారు. చాలు అంటే ఇంకా కొద్ది స్లోగా తగ్గుతాం, డౌన్ అవుతుంది.
నేను ఇంట్రొడ్యూస్ చేస్తాలే నేను.
రాజేష్ మాసెట్ కూడా లైన్ లో ఉన్నట్టుంది.
బాబా, ఇంక అందరూ మీ యొక్క ఆడియోస్ మ్యూట్ చేసుకోండి, వీడియోస్ మాత్రం అట్లా ఉంచండి. వీడియోస్ ఆన్ చేసే ఉంచండి, ఆడియో మాత్రం మ్యూట్ పెట్టుకోండి అందరు కూడా.
వీడియో అండ్ ఆడియో మ్యూట్ చేస్తాం సార్.
ఓకే సార్, తిరువయ్య కుమార్ గారు స్టార్ట్.
So he is Madhu, chartered accountant from Tadipatri. Okay, he is not practicing in Prakasam Jilla. So he is a very famous chartered accountant in the so reputed chartered accountant, first generation chartered accountant, and
Okay,
he is my hostel mate, my close friend also. So welcome back.
మధు గారు, ఇందాక నుంచి మిమ్మల్ని స్పాట్లైట్ చేద్దామంటే మీరు ప్రకాశం జిల్లా వారేమో, నేను మళ్ళీ తెలియక ఏంది వైస్ చైర్మన్ కి తెలియదు, లోకల్ మెంబర్స్ కూడా అంటారేమో అని అట్లా ఉన్నాను.
లేదు సార్, నాకు యాక్చువల్గా వాయిస్ ఓవర్ కాలేదు సార్.
ఇప్పుడు వస్తుంది.
క్లోజ్ ఫ్రెండ్ ఆఫ్
తిరువయ్య కుమార్ గారికి చెప్పాను. తిరువయ్య కుమార్ గారికి చాలా పెద్ద సర్కిల్ ఉంది. చాలా పెద్ద సర్కిల్.
Such a brilliant person, our hostel, sir. He's the only person has completed HWA very easily, sir. Compared to all other people in SKPD form.
Okay. Thiruvayu Kumar garu, start.
So we have completed GSTR-9 work with the templates and what is the objective of GSTR-9 and all those things. Now we will move on to the portal. Okay, in portal, how they are, not to the portal. First, we will go to the form. I hope everybody is having the forms. Please open your forms.
అందరికి కూడా ఫార్మ్స్
GSTR-9
990 ఫామ్ ఆల్రెడీ షేర్ చేశాము.
ఓకే, so now I am sharing GSTR-9 form. Is it visible? Okay,
visible.
Yes. See, this is the form GSTR-9. Heading of the GSTR-9 is the form GSTR-9. It is under Rule 80 and it is called annual return. So in first, people generally call it as table 1. 1 means table 1. Actually, one row. This is called table 1. This is table 2, table 3A, table 3B. And this is part 1. So there are so many parts are there. And in that parts is further divided into tables. And subtables is also there. So all these things are not important. So just like in ITR form, there are so many fields are there. So we will not remember all those things. Likewise, here it is not material whether it is part 1, 1, 2, 3. So I have skipped all those things, not necessary. So basic details, it will be auto-filled by the system itself. Now table 4. So table 4 is about the supplies, taxable supplies. There are only 2 tables, important tables for recording the sales. It is taxable sales, table 4, exempted sales, table 5. So now we will see taxable sales. If you see, there are taxable sales, there are 6, 1, 2, 3, 4, 5, 6, 7. 7 types of sales are there to be recorded. Okay, so it is not sufficient if you report the total sales figure under one head. The total sales figure has to be subdivided into different heads as required under GSTR-9. So Earlier, we have seen one table. In that table, we have calculated the tax rate wise liability, tax rate wise sales, tax rate wise liability. Here in this table, for reporting under this table, we have to recalculate the total sales. That means we have to bifurcate the total sales. It is like how many students are there in your college? Sir, in our college, 1,000 students are there, sir. Okay, that is the total figure. How many students are there class wise? Sir, first class, second class, third class, 100, 100, 100, 10 into 100, 1,000. That is another type of bifurcation. Sir, how many girls are there? How many boys are there? Sir, 400, 600, sir. It's another type of classification. Oh. How many hosteliers are there? How many day scholars are there? Total should be again 1,000. Like this, same 1,000 students, we can ask in a different way. So, department is also asking in different ways what is the bifurcation of the 1,000. So, here if you see B2C, we are familiar, consumer sales, B2B, businessman sales, these two we have to bifurcate, and these two, many people, many dealers will be having these two only, B2C, B2C, B2B. Okay, only these two. Others are rarely comes and it comes only for a big dealers. Zero rated supply with the tax, SEZ supply with the tax, deemed exports with the tax, advances on which tax is paid with the tax, inward supplies, reverse charge basis. So this table is also important. So this contains B2C sales, B2B sales, and reverse charge purchases. So total will be the subtotal. 4H is the subtotal. Again, credit notes. So credit notes have to give separately, but government has made it optional. So you need not report the credit notes, debit notes separately, adjustments separately. You can net it off and show directly what is the B2C net of returns, net of credit notes, net of debit notes, and as a single line item. B2B, net of credit notes, net of debit notes as a single line item. There is no need to show separately credit notes how much received, debit note how much issued, and amendments made in the 12 monthly returns. So this is optional. But that is about taxable sales. Now we'll come to exempted sales. In exempted sales, we may be having exports without payment of tax. That is called zero rated sales. Supplies to SEZ without payment of tax. Supplies on which tax is payable by the purchaser. And the reverse charge liability sales. Those three bifurcations should be given. And fourth bifurcation is the what is the exempted sales, what is the nil rated sales, what is the non-GST sales. So there is a lot of confusion between these three. Whether a sale falls under exempted, whether that sale falls under nil rated, whether that sale falls under non-GST. Okay, to remove all the confusion, government said that no, whatever may be it, you report all sales on which tax is not liable to pay under 5D exempted. So I have given separately. So exempted, nil rate, non-GST, no bifurcation is required. Put together all, you can show it under 5D. No bifurcation is required. This is a simplification given by the government because of the so many representations. So similarly, credit notes in respect of the exempted sales, you need not report it separately. You net it off and show in the above table, and all those sales, exempted sales, can be shown under 5D. That's all. Very simple table. So taxable sales, one table, exempted sales, second table. Before commencing the work, you just inquire with the client whether they are having any zero rated export sales, zero rated supplies to the SEZ, and deemed exports under section 147 advances if they are having these type of supplies also, you include this in our the working notes template. In the template, you include and collect the data at the time of collecting the total sales figure itself. So it will be easy. Again, you did not collect the same data. So table 4 and table 5 is the outward liability plus inward liability. So last table shows the total turnover, whether it is taxable, whether it is exempted, what is the total turnover, including advances. Here it will come. That is called table 5N. After 4 and 5, we will move to 9. Table 9. 4 taxable sales, 5 exempted sales. Now we will move to 9. Here, what is the tax payable? One column is the tax payable. There we have shown the tax liability line item wise, B2C wise, B2B wise, exports like that. Now we have to auto drafted all those things to here tax payable. What is the tax payable? Integrated tax payable. What is the tax payable? Tax payable as per the turnover declared in 4 and 5. As per the turnover declared in table 4, 5 is exempted. So as per table 4, what is the tax payable? It will automatically comes here. What is the paid amount? Through cash. What is the paid amount through cash? What is the paid amount through ITC? Whether we have to enter these items manually? No. Systems will throw all those figures. System will fill up all those figures based upon your 3B, and you cannot edit these figures also. So this table 9 is an important table. It is the final result for as far as tax liability is concerned. This table will show you whether you have to pay additional tax or not. Whether you have paid excess tax or lesser tax. Unfortunately, there is no such a line item which shows the tax payable less tax paid is equal to balance payable. In the income tax return, we will find out tax payable 1 lakh rupees, tax paid 90,000 rupees, balance tax payable 10,000 we will get. Likewise, here it will not show. So it will ask tax payable, it will give tax paid, that's all. We have to manually calculate and we have to understand whether we have paid taxes more or less. 10 and 11 amendments. So after noticing the errors, if any errors in 12 monthly returns by the dealer during the next year, that means 18-19 errors he might have noticed in 19-20. Those errors he might have rectified using the first 6 monthly returns 3B. He might have shown the unshowed tax liability in 3B. He might have taken the ITC, or he might have reduced the tax liability. So for declaring through amendments, we have to fill up in 10 for reducing sales or tax. For example, this is already historical data, not new data. For example, in 18-19, tax was over declared in 3B returns. Over declared. That means 5% taxable sales was declared as 18% taxable sales. That was noticed in 19-20. What they have done, they have reduced the excess paid tax, adjusted the excess paid tax in the monthly returns of 19-20. So that data we have to enter here. It is a very important, that data we have to enter here. Likewise, if any less declared data is there, if it was shown rectified in the next 6 monthly returns, that also we have to show here. Because the problem in the GST 3B returns is that it is a summary return. It is a summary return. It will not, there is no column to report whether the tax being paid is for 18-19 or 19-20. It will not show. Turnover, whether reported turnover is pertaining to 18-19 or 19-20, there is no column to show bifurcation. Here we have to show that bifurcation. If you don't show that bifurcation here, system or department will think that whatever shown in the 1920 returns applicable for that year only. It is does not contain the amendments for 1819, because as I already told, there is no separate column. There is no separate column in 3B returns, whether it pertains to 1819 or 1920. Put together, we will show in one column. So now department is asking whether you have carried out any amendments, whether increase or decrease. Increase or decrease. Please record it in table 10. Okay, that we have to record in table 10. 11, that if any decrease is there, we will record in table 11. So if any excess tax is paid during that period, okay, that data we have to show in 14 table also. Same data will come here. If, for example, tax declared through amendments 100 rupees plus tax reduced through amendments 50 rupees, then 100 minus 50, tax payable is 50, paid amount, automatically it will be paid. If tax is not paid, 3B cannot file. So automatically whatever payable is there here, we will enter the same amount here. Okay, so this table 14 is also a very simple table. 10 and 11 is very important tables. Don't forget these amendments carried out in the next 6 monthly returns. If you don't mention here, it will be assumed that you have not carried out any amendments. So 4 taxable sales, 5 exempted sales, 9 tax liability, 10 additional through a plus additional amendments declared through for increase of the tax, additional amendments declared through for the reduction of the tax or the taxable value, and 14 is the tax payable. So it's very simple to report the figures in these 6 tables: table 4, table 5, table 9, table 10, table 11, table 14. So with this my presentation on sales and tax liability is over. Any doubts? There are no doubts, I will move forward. So next is the input tax credit. How to reconcile how to check the input tax credit and how to report the input tax credit in GSTR-9. Here also the objective is to report the correct ITC as per books. Correct ITC as per books, not only books, eligible ITC as per books. Eligible ITC also we have to check. Though ITC is available in books, whether we have to check whether it is a eligible ITC or not. So that data required under this part is also very simple. This is the template. What is the total ITC availed? Eligible ITC availed in books. IGST how much? CGST how much? SGST how much? Total ITC availed. Let ITC reversed. So there are some rules are there for reversal. Common input we have to reverse. Personal use you have to reverse. Theft, fire we have to reverse. 17.5 we have to reverse. Like that, if there is anything after availing, if it is reversed, we have to show under reverse state. And what is the net ITC availed? Net ITC availed as per the books. So it looks like very simple. It is also very difficult task like sales. So this ITC availability ledger, it will contain both debits and credits. So input is also there in that ledger, output also there in the ledger, and sometimes there are journal entries between SGST, IGST, or IGST and CGST. So it is a very difficult task sometimes, in some cases, to find out what is the ITC availed as per books. It is not easy to find out. then what to do? What is the way out? So we have to take out all the tax invoices. We have to take out all the tax invoices and enter them in a tabular form. If the dealer's accountant, they are using tally, if they are entering all the purchases, whether it is goods, whether it is services, or whether it is fixed assets, or if they are entering through a purchase register and they are following GST futures in the tally, it will be very easy. Otherwise, it is very difficult to find out ITC available, because there may be ITC and purchases which are accounted for using the purchase voucher. There may be ITC for services like auditor fees, traveling, transport, so many other things which is recorded using the F7 journal entry, or sometimes directly using the F5 payment voucher, and some in case of fixed assets, recording them in directly fixed assets ledger using F5 or F7. So these many type of vouchers they will use, and in those cases it is a cumbersome procedure. It is a very difficult thing to find out what is the ITC availed by the dealer. So one way is to record all the invoices in Excel. If the data extracted from tally is not sufficient, we have to record again, enter the tax invoices data in an Excel columnar format, and then we have to find out what is the eligible ITC. Method 2, already told, extract the data from tally. Method 1 is the enter the invoices, tax invoice, take physically copies of the tax invoices and enter all those invoices in a tally columnar format, or extract the data from tally. So what is the method 3? So already your purchases invoices, tax invoices are reflected in the form of GSTR-9, in the form GSTR-9. So download that invoice, those invoices, and find out whether dealer is having those invoices with him or not. If those invoices are there, and you can easily find out what is the eligible ITC. If dealer is having additional invoices over and above the invoices shown in GSTR-9, then we have to visit section 16 and we have to find out whether assessee is eligible, whether the dealer is eligible to claim those invoices, input tax on those invoices. So we have to come to a conclusion whether ITC is eligible, eligibility of the ITC, eligibility of the ITC. So it is a big task in some cases. After finding out the ITC availed by the dealer, so there are different breakups will be there, comes up. ITC availed, gross ITC availed, ITC reversed, and 17.5 credit. Okay, so 17.5 block credit. In 17.5, sometimes they will take input and they will reverse the 17.5. In some cases, they will not at all record the 17.5 GST in the books. They will directly book the total invoice value to the fixed assets or to the respective ledger accounts if that ITC is not available. For example, car was purchased, ITC is not available, 17.5 blocked credit. So instead of showing GST in the purchase, car purchase invoice separately, they will show total invoice value, car invoice value into the fixed assets account by way of journal entry. So in 2A, you will find out 2A is more, whereas the books input tax is less. So each invoice we have to verify, and as I already told, it is a Hercules task in some cases. So finally, we have arrived to a conclusion. So we have finally come to a conclusion that the dealer has availed this much ITC. Okay. Then we have to compare, as per books he has availed this much ITC. Then we have to compare what is the ITC availed in 3B. 3B of 12 months? No, 3B of 12 months. And next year monthly returns filed up to 2010-2019. Not up to the September return. Please remember, not up to the September return, but returns filed up to 2010-2019 only eligible to be taken. If, for example, if September 2019 return is filed in November, ITC cannot be taken, of 18-19 ITC cannot be taken in that return. Okay, that is very much clear, everyone knows. So now we have two figures for comparison purposes. What is the ITC availed as per books and what is the ITC availed as per 3B return? Okay, 3B return. So I have taken a simple example. ITC availed as per books, IGST 10,000, CGST 5,000, SGST 5,000. Total 20,000 rupees they have availed. ITC availed as per 3B. Total ITC availed 3B is also 20,000. ITC availed as per books also 20,000. But we have to compare tax type wise, tax wise. So you have to compare tax wise. IGST availed 10,000, but in 3B they have availed only 9,000. CGST availed 5,000, but they have availed in 3B 5,500. SGST 5,000, but they have availed in 3B 5,500. But when you compare both 2020, it looks same, equal. So everything is correct. No, we have to drill down to the each tax type wise. So less claimed in 3B 1,000 rupees. Though assessee taken ITC as per books 10,000, but in 3B they have claimed as 9,000 only. So less claimed 1,000 rupees. Excess claimed 5,000 minus 5,500. Excess claimed 500. In the case of CGST, they have claimed excess. SGST also 500 rupees. They have claimed excess. So 1,000 IGST less claimed, 1,000 CGST, SGST excess claim. Now question comes to us. What is the way out? What should we do? So what should we do? Like sales, we have to pay, we have to reverse excess claimed ITC, 500 we have claimed excess. Here also we have claimed 500 excess. So 1,000 rupees we have claimed excess. So excess claimed ITC is to be reversed. If you are reversing using DRC 03 before filing GSTR-9, you can reverse it using the ITC credit available. If you are reversing after filing GSTR-9, you have to reverse with cash. Less claimed in 3B. So what you have to do? Whether you can claim now? No, the time is over for claiming the missed ITC. 18-19 missed ITC, now you cannot claim. So 1,000 is a loss for the client and has to pay again 1,000. So total loss for him is 2,000 rupees. So note 1, total ITC availed as per books 20,000, as per 3B also 20,000. It does not mean that everything is right. We have to check each tax type wise. In case of ITC and capital goods, ITC is available only when the depreciation on that ITC is not claimed. So we have to remember, in the case of capital goods, ITC should not be availed. Should be eligible only if it is not if depreciation is not claimed. For example, he has purchased a truck 10 lakhs rupees. On that GST is 2,80,000 rupees. Generally, what he has to do? So on truck, ITC is eligible. So he has to debit 10 lakhs to the fixed assets account, not the 12,80,000. For suppose that accountant, that dealer has debited 12,80,000 to the truck account under fixed assets and also claimed depreciation on that. And what is the way out? He is having tax invoice, original tax invoice. He has received the goods. He has paid the amount, consideration. He has paid the consideration, and it is reflecting in 2A and claimed in 3B also. But when it comes to the books, he has claimed depreciation on that tax amount of 2,80,000 rupees. So it becomes ineligible ITC, and dealer has to reverse the ITC. He cannot claim both benefits under GST and also under the Income Tax Act. Either GST benefit you have to take, or under the depreciation benefit under the Income Tax Act you have to take. You cannot take both benefits. But in the case of purchase of goods and services, there is no such condition. I have not found any such condition in the provisions of the Act. That means a very interesting situation arises here. See, a dealer purchased goods or something service, he has purchased service worth 10,000 rupees. On that 1,800 is the tax. Total 11,800 he has paid. For example, internet bill total he has paid 11,800. It was recorded in the books under the internet expenditure 11,800. Shown 11,800 in the profit and loss account. Shown the 11,800 in the profit and loss account. It is a tax invoice, but he has claimed that 1,800 as input tax in the 3B. That invoice is also reflected in 2A. Everything is tallied, but in the books he has not claimed it as a input tax credit. He has shown it as a expenditure and booked under profit and loss account. Then what is to be done in those cases? So as per my view, that depreciation should not be claimed. That condition is there for capital goods, but for goods and services other than capital goods and services, there is no such condition. So as per my view, even if that GST is claimed as expenditure in the books of accounts, he is eligible to claim that ITC in 3B returns. But as per accounting, as per other income tax, that is a wrong. So in the next year, if possible, he has to reverse the expenditure and transfer that amount to the input tax ledger. So in case of ITC less claimed, so what we have to do? Less claimed in 3B. So once you have found out ITC is less claimed in 3B, you please remember that it is a cost to the dealer. It is a cost to the dealer. ITC is asset. If you do not recognize that asset, it will become cost. You take similar example, Chakka. He has paid 2,80,000 rupees as GST, but he has not taken that amount in 3B. He has not taken amount that 3B. Whether we can take now, as I already told, that time to take ITC is over. So what is the way out for 2,80,000? Is a very huge amount. How to report that amount? Whether we can claim? For that, what you have to do is to check thoroughly whether it is claimed in the next 6 monthly returns. So what generally people do is they will claim the 1819 ITC, missed ITC 1920, but they will not record it in the books anywhere. In the registers or in the books, they will not record. There is no facility in 3B whether that ITC pertains to the 1819 or 1920. Both put together only we will claim under one column. ITC availed. Whether it is 1819 ITC, 1920 ITC, we will claim under one column. So 1920 we are not doing audit. 1920 books we are not doing audit, GST audit. So how to know whether this missed ITC is claimed in next 6 months or not? The accountant might have claimed, the auditor might have claimed it, and he might have forgotten it. So you please thoroughly check the next 6 monthly returns whether this missed ITC is claimed or not. If you come to a conclusion that this missed ITC is claimed in next 6 monthly returns, you can report it in 12-13 columns. So it is very important. This is the only way out to save the dealer and to claim the additional tax. Case B, in case of excess claimed in 3B. So similar, excess claimed means he has to pay now that excess claimed tax, excess claimed ITC, he has remit back to the government with interest. Okay, if he has utilized that excess ITC for payment of outward tax liability, he has to now reverse that ITC with tax. So this is also burden on the taxpayer, so registered person. So thoroughly check whether this ITC was reversed by the accountant in the next 6 monthly returns. If he has recorded it somewhere, very good. If he is not recorded, then again once again check and see that whether this any reversal was made in the next 6 monthly returns. If any reversal was made, then very good. You report in 12 and 13 columns of GSTR-9, and a client will need not reverse the tax now. So what are the issues that can come up now? ITC correctly claimed in 3B, but tax invoice not at all entered in books. So we will see this scenario in case of proprietor and partnership firms mostly. So 2A invoice is there. It is a general supply, regular supply. 2A, there is an invoice is there. Based on the 2A, ITC was claimed correctly. That was received by the client. Goods are received by the client, but our services are received by the client, but total invoice is missed in books of accounts. That means he might have paid from his personal pocket and he might have forgotten to give that invoice to the accountant to record it in his books of accounts. He has received the goods, he has received the services, and he has paid the amount also, but he forgotten to keep that invoice in the purchase register, in the purchase file. That happened in the case of capital goods. What to do? That happened in the case of inputs or input services. What to do? So books in 3B correctly claimed, but in books, invoice is not at all there. In the books of accounts, invoice is not at all there. Then what is to be done? Next issue. ITC correctly claimed in 3B. Invoice also entered in books, but ITC amount not entered in ITC ledger. That means assessee or dealer purchased 1 lakh worth of services, tax paid 18,000, total 1,18,000, but he has forgotten to bifurcate and total amount was recorded as expenditure in profit and loss account. 1,18,000 was recorded as expenditure in profit and loss account. In 3B correctly claimed, 18,000 was claimed as ITC, 2A is there, tax was paid, amount was, consideration was paid to the seller, everything is okay. But in books of records, in the books of accounts, he has forgotten to bifurcate the ITC and the total invoice value was claimed as expenditure or total invoice value was taken to fixed assets ledger. Then what is the way out? Third issue, blocked credit 17.5 not claimed in e-credit ledger but availed in books. Okay, 17.5. So accountant correctly 17.5. Sir, this is 17.5. So at the time of 3B entry, he has not taken it into the ITC ledger. But while preparing the books of accounts, that ITC was availed by him in the books of accounts wrongly. So what to do now? Fourth, blocked credit 17.5 not availed in books but availed in 3B. So vice versa. So since it is a blocked credit in books of accounts, he has not claimed, but he has claimed it in 3B. What is to be done now? Fifth issue, RCM tax paid, but ITC not availed in 3B. So everyone knows we have to pay tax on RCM basis and take immediately ITC in that month itself. But he has paid the taxes, and he has not taken the input for the RCM. So it is reverse. RCM ITC availed in books and 3B, but not tax amount not paid. So they have availed the ITC on RCM, but tax was not paid. So in the case of ITC, there will be e-credit ledger. The ITC ledger balance as per the books of accounts should be equal to the e-credit ledger appearing in the portal. If there is a closing balance of e-credit ledger of 1 lakh, your books also should disclose 1 lakh credit. If there is any mismatch, so just at a glance, you can tell that there is something error is there. For example, e-credit ledger balance 1 lakh, your books balance is 80,000. It is not matching. So it means that something error is there, and we have to drill down to the invoice level to find out the error. So ineligible ITC reversed in books, not reversed in 3B or vice versa. ITC and credit notes received on purchases, not reversed in 3B and also in books. So many dealers are doing this by knowingly or unknowingly. They are claiming full ITC and purchases and not reversing the credit notes GST amount. So they are getting credit notes from the suppliers with GST. So they are recording total credit note amount, including GST, as credit note amount without reversing the ITC. Now we have to reverse that ITC. Another problem, instead of reversal of ITC, that amount is added to tax liability in 3B and tax is paid. So instead of reversal, they have erroneously added to the tax liability and tax was paid. This is another common mistake. IGST ITC was wrongly claimed as CGST, SGST in 3B and vice versa. Sometimes IGST ITC was wrongly claimed as CGST, IGST in the books or in 3B, wrongly claimed. So what is the final conclusion? If excess ITC claimed in 3B, it should be reversed. Please remember, if excess ITC is claimed in 3B, it should be reversed using DRC 03. If less ITC claimed in 3B, then it is not possible to claim that less ITC now. So this is the conclusion. Reporting. What are the reporting tables in GSTR-9? Relevant tables to be filled in GSTR-9 are Table 6 ITC availed, Table 7 ITC reversed, Table 12 reversal of ITC next 6 months, Table 13 ITC availed next 6 months, Table 8 calculation of ITC lapsed. So these are the tables relevant for reporting in GSTR-9 about ITC. In this, these are the two important tables, 6 and 7. What is the ITC, gross ITC availed? How much ITC was reversed? So we will get the net ITC availed. That we have to compare with the 3B. That is the table which I have given. Net ITC availed should be compared with the ITC availed in 3B. So after that, another table is there. It's a statistical purpose. Table 8, that is calculation of ITC lapsed. No amount will be posted to the credit ledgers, whether e-credit ledger or any other ledger. It is a statistical purpose. It is comparison between the ITC availed and what is the ITC available in 2A. For example, ITC available in 2A is 1 lakh, ITC available is 90,000. So what is that 10,000 difference is appearing? It may be blocked credit or it may be forgotten credit. So we have to report that, sir, we have forgotten to take that 10,000. We are eligible, but we have forgotten to take that. We have to enter. Or no, sir, we know it that 10,000 is a blocked credit. That's why we have not taken it to our books of account. That we have to report here. Anything, it is not going to amend the your e-credit ledger in the portal. So now we'll go to the 9. So I will finish in 10 minutes or 10-15 minutes. So already time is over, the given time for me. Four, 5 is about sales. Now 6, 7 is about ITC. Now we will go to 6, 7. Just one line item is sufficient? No, we have to give some bifurcation also here. But that bifurcation was simplified by the government. Now we have to give very simple bifurcation. So this is the table 6, details of ITC availed during the financial year. So inward supplies on purchases, how much you have availed ITC. Purchases we have to further divide into 3, input purchases, capital good purchases, input services. But the government has rightly simplified this procedure and you need not bifurcate the purchases into 3 and you can report all purchases, all ITC on purchases under inputs column only. You need not bifurcate capital goods and input services. So ITC availed on purchases, ITC availed on RCM purchases. Okay, these are the two things we have to fill up. So import of goods, inward supplies, register person, all these things are there. Import of services, all are reverse charges. Input tax credit received. So total ITC will be available here. So table 7 is the reversal of ITC. So there are so many rules are there. Rule 37, Rule 39, Rule 42, Rule 43. As per section 17.5, so many things are there. So now government has simplified. You need not report each line wise. All the ITC reversal report under other reversals. If it is available with you, it is okay, fine. You report under each line item. If it is not available with you, what is the reason for reversal? You can total amount in one column, other ITC, other reversals. Okay, then ITC availed minus ITC reverse. What you will get? Net ITC available for utilization. ITC availed minus net ITC reversed. Net ITC available for utilization. This amount we have to compare with the 3B. So there we will get whether you have claimed excess or whether you have claimed less. I have given already solutions for those scenarios. Table 8 is the ITC related information, other information, statistical information. So it is based on GSTR-2A. So your suppliers will report in GSTR-1, will be reflected in GSTR-2A. So what is the amount claimed by you? Claimed by you is 1 lakh and reflected one is 90,000. So you have to give reasons here. Why you have claimed more than the reflected amount. Whether you have to reverse it or not, you have to take a call. ITC available as per GSTR-2A, 1,10,000. You have availed 1 lakh, why 10,000 less availed? Whether it is a blocked credit or you have forgotten to avail. That you have to report here. That's all. Nothing else is there in this column, table 8. So final conclusion of table 8 is whether how much amount is not, how much amount is lapsed. This is the final conclusion of table 8. How much amount is lapsed in current financial year for the ITC related amount. So it is not going to affect your ITC ledger. So what about ITC availed in the next year? We have to report here 12. ITC availed 12. ITC reversed 13 in the next financial year, next 6 months returns. But government has simplified here. They are saying is that it is optional. So in my view, it should not be optional. It should be compulsory only. Optional, it should not be optional. So where we will report in 3B, it is not available to separately report, bifurcate and report whether it is 1819 ITC or 1920 ITC. It is not available in 3B. The only place available to report next year ITC is the 12 and 13, and government makes it is optional. I don't understand where to report the figures if it is optional. So in my view, it is not optional. It is compulsory. If you have availed ITC next year or you have reversed ITC next year, kindly report here and don't leave these columns as they are made optional, thinking that is optional. So now we have finished tables relating to sales and tax liability, tables relating to ITC. That's all. There is nothing more in the GSTR-9. So we have come to a conclusion. What is your liability on account of outward tax? Whether you have paid excess or whether you have paid less. That is a separate item. What about ITC? Whether you have claimed less or whether you have claimed more. In the case of sales also, you can find out whether you have shown more sales or less sales or when compared to books and 3B. So all these 6 scenarios are there. 3 things you have to report: sales, tax liability, ITC. So when 3 things are reporting, for each thing 2 scenarios are there. Whether you have excess reported, short reported. Sales excess reported, short reported. ITC excess reported, short reported. Liability excess reported, short reported. And I have given the solutions also for those scenarios, and all other tables in GSTR-9 now optional. So HSN codes and supplies from composition dealers, all those things are now optional except table number 19. Table number 19 is the late fees. Late fees for 3B Kadu is late fees for GSTR-9. So there is 200 rupees per day late fees is there. That late fees will be reflected here automatically. You need not bother about the calculation of the late fees. System will throw up the figure. Unless you pay this late fees, system will not accept the late fee GSTR-9. Okay. So with this, my presentation is over.
Thank you, Thiruvayu Kumar garu. Now, question answer session. Only see time already 8:36 aindi. Only limited question answers will be taken up. Members అందరూ కూడా please switch on your videos. If you have any questions on GSTR 9 and 9C, please raise those questions. Sir Kishore garu.
Sir, it was a wonderful presentation. Anni issues anni chepparu, but solution cheppala. And there is an error in the books of accounts or 3B. How to rectify, where to report. మీరు అన్ని ఇష్యూస్ పాయింట్అవుట్ చేశారు, వచ్చిన ఇష్యూస్ అన్ని కవర్ చేశారు, బట్ అది ఎలా రిపోర్ట్ చేయాలి, ఎక్కడ రెక్టిఫై చేయాలి అనేది కవర్ చేయలేదు. ఇది టైం కన్సమ్ వల్ల ఏమన్నా మిస్ అవుట్ అయిందేమో.
ఆల్రెడీ 8:30, సో అక్కడ రాజేంద్ర ప్రసాద్ గారు ఉన్నారు కాబట్టి మనం ఇంకేం చేయం.
బట్ ఇంపార్టెంట్ మా లాంటి వాళ్ళకి అవే కదా సార్, ఎక్కడ రిపోర్ట్ చేయాలనేదే మెయిన్ కన్సర్న్. ఇష్యూస్ అందరి దగ్గర ఉన్నాయి, ఆన్సర్స్ ఎవరి దగ్గర లేవు.
మనకి అడ్వాంటేజ్ ఏంటంటే తిరువై కుమార్ గారు మనకి హాట్ లైన్ అవైలబిలిటీ ఉంటారు. If you have any specific issues, one or two, just raise them for the discussion purpose. Some of our members are already putting messages. Okay, we'll read them. First question from Duddu Saujanya. RCM of 18-19 paid in financial year 19-20.
So RCM of 18-19 paid in financial 19-20. In which month it was paid? If it is paid and within first 6 months, you can claim. Otherwise, not possible. But there are many views. So in the case of you can claim at any point of time. Whenever you pay the tax, in whichever year you pay the tax, you can claim. That is the expert's opinion. So if you want to take a call, you can claim that amount as ITC in the month in which it is paid.
It is a disputable point unless some court or some tribunal gives a decision. It is very difficult. Now, what some of the experts are telling, whenever you pay, you can claim, because only one thing we have to consider is raising of self-invoice. Based on self-invoice, if you raise the self-invoice now, you can take now. So be cautious. Next, Madhu. What turnover to be shown in 3CB form should we obtain from 3B?
Ideally, 3B turnover and books turnover should be tallied. If it is not tallied and something more is reported in the next 6 months, we also take that one. And both turnover should be same. 3B and 44AB turnover, books turnover should be same. So you can obtain from 3B and plus amendments made in the next 6 months. Both put together, you can claim in 3CB.
One more thing, sir. In income tax return, there is an option, where we need to fill the GST turnover as per GST.
That is what the question. Okay, that is
what the question. He is asking about 3CD. I am asking about income tax return.
In 3CB, where is the thing to enter GST turnover? It is there.
In where? 3CD.
3CD is there.
3CD is there. We give the ratios, na? There we need to enter the.
That is book turnover.
Book turnover.
Only GST turnover we have to give in ITR form only, not in 3CB.
ITR form only.
Yes, sir.
Right now we are book turnover only.
Yes, sir. Yes, sir. If you are having only book turnover,
even though we made adjustments in the next year, we are giving the book turnover only.
Okay. What is going to be reported GSTR-9, that we have to report here. Okay. So from where they will take comparison figures, we don't know. Whether income tax department will compare with the 3B returns or one return or the GSTR-9, we don't know. Whether GST department will compare this or we don't know. Presently, we have to report the correct figure. What is the correct turnover? We have to report it here.
For GST auditor, does it requires any reporting in GSTR 9 and 9C?
That might be the addition to the first question. For RCM, it was the missed out. Addition to the first question. RCM of 1819 paid in 1920. For GST auditor, does it requires to be reported in 9 and 9C?
For GST auditor, does it requires any reporting in GSTR-9 and 9C? Okay.
That is the addition to the first question, sir.
Okay. So GSTR-9 and 9C, if ITC reverse charge basis ITC is paid in 20 or for that matter 2021, that means after 6 months. After 6 months at the end of the year, if it was paid in 1920 or 2021, where is the role of the chartered accountant to report in 9 or 9C? In that year, it was not happened. So nowhere to report.
In 9C, when we report with when we reconcile with books of accounts, there we need to mention.
Where?
In 9C, reconciliation of input tax credit.
So it is inviting trouble in my opinion. So since it's not there in books, and you can avoid it. Since it is not at all required.
It is there in the books, but not reported in 3B.
Okay, no. If invoice is raised and not paid tax, then you have to report. Purchase invoice is raised, RCM purchase invoice is raised, and RCM tax is not paid, then you have to report and tell that in the columns that this was paid in the so and so month, so and so date, and so this was not reported as a liability to be paid, recommended as liability to be paid. Then you can give a note.
అసలు పే చేయకపోతే
అసలు పే చేస్తే పే చేయాలి, రికమెండ్ టు పే.
ఆర్సీఎం సంబంధించినటువంటి ఎంట్రీస్ పాస్ చేయాల,
అసలు ఏం పాస్ చేయలేదు, పే చేయలేదు, దెన్ అదే ఆడిటర్ యు హావ్ టు రికమెండ్.
ITC claimed in 3B but not appearing in 2A. How to deal with this kind of situation?
ITC claimed in
3B but not appearing in 2A.
ITC claimed in 3B but not appearing in 2A. How to deal with this kind of situation? So there are many court cases are pending against section 16(4). So you can take a call whether to claim or not. So what Supreme Court judgment, we are awaiting judgments in those cases. Calling this section itself, section is ultraviolates the constitution. So judgment is awaited. So you can take a call whether to go ahead or.
3 ITC claim చేసుకోవడానికి there are some 3 or 4 concepts. ఒకటి tax invoice ఉండాలి, goods receive చేసుకొని ఉండాలి, సెల్లర్ రిటర్న్ అప్లోడ్ చేసి ఉండాలి. 2A రిస్ట్రిక్షన్స్ కానీ ఇవన్నీ కూడా రూల్స్ లో పెట్టారు. యాక్ట్ లో లేనిది రూల్లోకి తీసుకురాకూడదు అనేది ఇంటెన్షన్. సో రెండు మిక్స్ చేసి చేస్తుంది గవర్నమెంట్. వీ హ్యావ్ టు సీ.
So in my personal opinion, you can take the credit, because how can we ensure that that seller has paid the tax to the government or not? Seller is the agent of the government. So government has given the license to collect the taxes, and as per their license only we have paid. Whether that agent has paid the taxes to their principal or not, it is not our botheration. It is government should take care of it. They should appoint right agents to collect the taxes.
Oh, but we have analyzed some sample cases. అంటే 2Aలో లేకుండా మనకి ఇన్వాయిస్ ఇచ్చినాయి కనుక శాంపుల్ కేసెస్ వెరిఫై చేస్తే, when we have verified the status of the registration, for some cases the registration was cancelled even before issuing this invoice. If that is the case,
then we have to reverse. It is a fraud and we have to reverse it. In the case of
similarly, some of the composition taxpayers have raised invoice with tax.
That all everything you have to reverse.
So if these kind of situations, we cannot take ITC.
Yes, yes.
What could be the situation if exempted turnover was not considered in GSTR 3B return and considered in books of accounts and in income tax return?
Sir, there are no effects, sir. If the exempted turnover is not reported in 3B, no problem. Now you report in GSTR-9. For that purpose, we have to effectively use the GSTR-9 for this purpose only. Main purpose is this one. The exempted turnover you report in GSTR-9. So when somebody compares both the income tax and GST returns, it should be tallied. If it is not tallied, you will get a notice. Whether it is exempt, the differences arises out of exempted turnover is another matter. First, they will issue a notice. You have to attend and you have to prove yourself that it is an exempted turnover. So avoid all those situations. You just kindly claim total turnover in GSTR-9, including exempted, including interest received, including interest on fixed deposit, including house rent received, everything show in the GSTR-9.
If GSTR-9 is also filed without considering exempted turnover,
show in 9C. In 9C. Nothing wrong. You can show 9C. And there will be unreconciled turnover. You say that this unreconciled turnover is due to exempted turnover, hence no tax is payable. So client will be saved.
any more questions?
Latest one more question has come. Whether to pay RCM. Whether to pay RCM on transport charges only if transporter registered on GST, in GST. How to identify they are GTA or not?
So simple is that if consignment note is received from the transporter, it is a GTA, and whether it is registered or not registered, we have to pay the tax on RCM basis. If there is no consignment note, then there is no need of paying tax on RCM basis, whether it is registered or not.
Sir, in case of rice mill, bran is taxable. If he purchase any capital goods, how to deal that ITC?
What is the percentage of the bran sales, sir, in rice mills total sales?
5%, I think. 5%.
So you have to take 5% as the ITC.
ITC. And then the excess won't be on purchase of capital goods. It is 28%. Then what about? Even then, we have to take only 5%.
5% of the 28%.
The remaining is lapsed.
Expenditure. You have to add back to the fixed asset cost.
Fixed asset cost. Okay, thank you.
You can claim depreciation.
And the balance?
Total. Except claim ITC. Except 5%, you can claim the depreciation.
Okay, thank you, sir.
One more query. Is it necessary to apply GST for real estate? That is site developers whose turnover is crossing more than 2 crores. By Madhu Tadipatri.
In the case of completely exempted turnover, and sale of plots is exempted from GST as it is a site, land. So if he is having any taxable turnover, even 1 rupee also, then he has to register under GST and pay tax on 1 rupee taxable turnover. Turnover has to be shown as exempted turnover. Okay, but in some cases now, authority for advanced rulings and those things have held that site sold in a venture, developed venture is a taxable event. It is not a site land sold. It is a services sold. So that sales, though it is registered under sub-register office, land sale value is a taxable under GST also. Some authorities have held like that. So in my view, land is a land, whether it is developed or not. So land should not be taxed under GST, but they have held that other amenities are more. Land value is 1 lakh and the amenities are 2 lakhs. Road, drainage, current and other similar amenities. So they are selling at 3 lakhs. Stamp duty value is 1 lakh and they are selling at 3 lakhs. So their lordships held that your services are more, apart from land, you are selling something else. So it
is given in advance ruling. It may not pass the test of law in future because the GST is not having power to tax on immovable properties, where the entire property is registered through registrar office, and even The registration charges are also paid on the entire sale value.
If the land developers collect development charges separately, included in the sale deed, then it is liable for GST.
Rate of tax
18.
18%.
Some of the dealers are issuing taxable invoice for some transport charges and some invoices without GST. Is this allowed under GST?
Either one has to opt for to charge or not to charge.
నీకు క్యాపిటల్ గూడ్స్ మీద ఎక్కువ పర్సెంటేజ్
Kishore clarified, you are telling only one registered person is issuing with tax and without tax are different persons.
Yes. Some
One
charges,
person.
I mean, whenever the client has been reimbursing with GST, they are issuing GST invoices. Otherwise, they are simply collecting the money without issuing any invoices. Whether it is allowed under GST or not.
కదా దాంట్లో నుంచి 5 నీకు రామ్ మీద ఎంత ట్యాక్స్ వస్తుందో అది తీసేసి రిమైనింగ్ ది అసెట్ కి డెబిట్ చేయమంటారు.
సార్ సిఏ వెంకటేశ్వర గారు ఒకసారి అన్మ్యూట్ చేసుకోండి సార్. మీరు మ్యూట్ చేయండి సార్.
ఓకే థ్యాంక్ యూ.
సేమ్ పర్సన్ రివర్స్ ఛార్జ్ అని ఉండాలి, ఫార్వర్డ్ ఛార్జ్ అని ఉండాలి. మిక్స్డ్ ఛార్జ్ అనేది లేదు, అది సార్ చెప్తుంది. అంతే కదా?
నా అభిప్రాయం అయితే అది
మిక్స్డ్ ఛార్జ్ లేదు. ఏదర్ 100% రివర్స్ ఛార్జ్ ఆర్ 100% ఫార్వర్డ్ ఛార్జ్.
Okay, thank you.
Saujanya, one more doubt raised. For exempted goods, dealers, if capital goods purchased, ITC is not available. So in such cases, can we claim depreciation on cost plus GST?
Yes. On total value, you can claim depreciation.
So we'll take up last 2 questions. Any more questions? Only 2 questions. Now, shall we proceed to vote of thanks? Now,
మీటింగ్ గురించి చెప్పండి.
Yeah. Now I request CA B. Jaganmohan Garu, Sikasa Chairman and past Chairman of our Ongole branch, to present the vote of thanks for our beloved speaker, CA Chakka Thiruvayu Kumar Garu.
Okay, last question, sir. Vamsi Krishna Gollapudi, can we claim GST on biodiesel? Kumar.
Why this question?
Biodiesel.
It is not in block credit, sir. So it can be claimed.
Vamsi.
Yes, sir.
Are you able to?
It's not under 5.
దానికి ఇంతకుముందు సెన్వాట్ క్రెడిట్ రూల్స్ లో ఉంది కదా సార్, ఫ్యూయల్ స్పెషల్ ఎగ్జామ్ చేశారు కదా.
అవును.
దీంట్లో ఏమన్నా మనకి ఎక్కడ నాకు దొరకలేదు, బ్లాక్ క్రెడిట్స్ లో లేదు.
మర్చిపోయి ఉంటారు.
Okay, a wonderful discussion by our members and queries also very good questions. I thank our today's chief guest, CAT Chinnamasthan Garu, Regional Council Member SIRC, and our ex-officio member of our Ongole branch. I thank similarly guest of honor, today's guest of honor, CA Geeta, who she with short notice she has attended and given wonderful speech. I thank on behalf of Ongole branch to her also, and we once again thank our today's resource person, Mr. Chakka Thiruvayu Kumaru. A wonderful presentation, excellent presentation and it is nothing but a refresh course and intensified coaching to the like students, because already most of the members know about 9 and 9C. It is nothing but intensified. Finally, I request all the members of Ongole branch, please subscribe to our Ongole branch YouTube, in which we are uploading today's presentation by our Thiruvayu Kumar. Similarly, we are going to conduct seminar on 17/11/2020 by partner Hiraganga and Associates, Mr. Maddi Rajesh. Subject is exceptions to blocked credits, which is very recent topic by our members, raised by our members. I thank one and all, and finally, happy Diwali to all the members of Ongole branch. Thank you. Remember, okay, na?
Thank you.
Thank you.
Thank you all. Thank you all, one and all. Closing the session.
Yes. Any more discussions by members? Chatting. If you want chit chat, you can chat.